Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 23rd of November, 2021. This is episode number 2122. A reminder that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're still in the U.S. Thanksgiving holiday week. Now, normally, this would be a sleeper. This would be a slow-ish week, and it launches us into the end of the month next week, and the good old Santa Claus rally into December. Generally, December lately has been quite active into the new year. I'll be here for that. But overall, yesterday was very dramatic in a way, in that financials were very strong, comm services were quite weak, techs were weak, and then we ended up spilling over as the market, I guess, started to as the inflation or as the taper discussion got back to the front of everybody's minds in regards to the Fed tightening. So the Fed funds futures are pricing in a move earlier from third quarter to the summer, and which is great for financials, and that's where the strength is. And then the market just responded to the downside. So that's an explanation, but who knows, right? There's always somebody out there who can explain anything in the market. So right now, the markets are mildly risk off. They're not really mixed. They could be mixed. They were mildly risk off. We've climbed a little bit since this pre-market summary sheet was done. And overall, we're seeing that Europe remains a laggard. The Dow's holding up is positive, but only 10 basis points, as you can see to the right. One rotation in the Dow's 38 points on a 1-minute time frame, 20 sessions back, and the Dow's up 38 points. So that's just one rotation. So you can consider it unchanged. The NASDAQ is one rotation down. You can see to the right in the gray box, NQ 24.25. And the NASDAQ's currently down 26 points. So really, it's mostly unchanged with weakness in Europe. Crude oil taking a pop as OPEC came out and said that if India and the U.S. Do release supplies from their strategic petroleum reserves, that in return, OPEC will reduce supply to offset that. So we saw a decent bounce in crude, but crude had a technical pullback to that 74.95 area that I'd tweeted about for 3 days last week and yesterday, and is bouncing back up. Crude is up almost $2 from that low volume node that was expected to be tested. So gold really took a bashing. Yesterday, it has dropped $100. Silver is off as well. Copper holding steady. And the crypto is just completely choppy currently, just completely sideways. Looking at the calendar, really, we're looking at the market manufacturing and composite as well as services PMIs at 9:45 Eastern. That's about 15 minutes after the cash open. Crude oil stock change from API at 4:30, and then Australian construction work done, and so on and so on and so forth. New Zealand interest rate decision at 8 p.m. Eastern. If you're trading during that time frame, be aware. And then as far as earnings, we had Dollar Tree, Dick's, Best Buy, Medtronic, and post after the market closed, we have Dell and HP, big ones. And then Gap, VMware, Nordstrom, and Autodesk. So that's how that's playing out. In the S&P, we have relatively heavy volume so far. The S&P has tested way down into that 2654 level Again, remember from last week or the week before, 2654.75 was one of the key test areas, and we hit that to the tick. I do believe the market has memory and has bounced up in what is a V-shaped bottom here. Overnight inventory 70% short. We have a P-shape-ish profile, and the range is 34.5 points. So really active. Again, the idea that Thanksgiving week is generally lazy has been thwarted by the Fed chair announcement yesterday. We're back at 4680 as the overnight VPOC. Now remember, 4673.50, 4680, 4690 are all key prices, key test areas the market got tangled up with, and the overnight sessions got 4679.50, so right in there. Here's what happened yesterday in our review segment. Going to make this really brief. We had scenario 1 and 2 pretty heavy yesterday. I'm having to squish the screen. Look at how much activity there is, nicely filling in the screen. I'm not going to do a trader wisdom segment here, but man, yesterday was frustrating. So for me personally, yesterday reminded me of how the state of our rest can really impact performance. Yesterday, I woke up, on Monday night, I woke up at 1:45 a.m. or something like that. Just was wide awake and was up till about 4:30 a.m. and then finally fell back asleep and then really had a hard time crawling out of bed and just felt off all morning. So saw the movement, saw the long setup. We talked about the long setup in right off the open in the Convergent Trading Head Trader channel. Narrated that the expectation yesterday, if you recall, was 47.20 immediately, and then 47.30 as the extended target or the key target. We ended up going to the next level up, which is 47.40. There is a measured move right at 47.41, and we just stopped short of it by 3 ticks. And so that's all well and good, and then the market pulls back to the mid right here, and then there's a fight and it releases. So that trade is done. As soon as we fall through the mid, that trade is done. The long trade is done. And now I'm looking for a short trade because of the aggressiveness of the move down. And I happen to not know where my clicker is, and it was on the short side on my platform, and I went to maximize the window, so I double clicked without knowing where the clicker is, and I got short down here somewhere, 2 fills. And although I was already irritated and emotionally agitated, just I think out of fatigue, there's no point getting emotionally agitated with the market, having missed that huge move down from 47.30 all the way down to 46.97.50. Now I've got the short position, which is an error trade. It's error number 5, I think. And so I have to close the position. And here's the catch. And I'm only sharing this with you just to tell you the realities of trading. I've been doing this 21 years. And I'm going to tell you that normally something like that, don't really care, move on, look for the pullback. The next trade that would set up is the IB low, the open at 47.12, looking for a continuation, looking for the continuation of this. So I look for it to pull back to 12, and I'm wrong. So the entry would be 12. I'm wrong above 14, 1450 or so, the prior day's high, and I'm looking for the continuation move. But it was all scrambled in my head. And the point being, I'm not complaining here. The point being that it doesn't matter how much experience you've had and how many trades. I've done probably hundreds of thousands of trades, I would think. I don't know what the number is, but it's a lot. It was used to be a very heavy market maker, but um, I could not let go of that error. So I missed the 47.12. So then that so now I'm frustrated. So my ability to let go, just by virtue of not getting good rest, my ability to let go of an error was completely destroyed. And regaining perspective on the market became very difficult. So I just went silent, and then just watched the rest of the session until somewhere near the close. It was a very, very frustrating day. The problem is that I didn't do anything incredibly unusual or stupid or whatever, but the fact that I was not mentally fit to trade really destroyed my ability to be objective about the market and to respond without any hesitation or thought or anything. Just follow the process, follow the routine, follow the plan, because that's what makes money, in my opinion. So beautiful trading, and the day ended. We closed at the low, as you can see there. We pretty much closed right at the low here in M period, and I was still angry on my drive home from the day. Again, the state of mind, if you're not paying attention to your state of mind, your emotional state, and being able to recenter quickly, or being centered, which is where meditation is just a huge asset, it's hard to see the market for what it is. And so we start to consider these things like, this can't go any lower, and you start to want to fade. I don't do any of that, but you start to want to fade, you start to hesitate, you start to second guess, and the best thing you could do is just call it off and just be done. Very frustrating day for me yesterday is the bottom line. Again, I'm not telling you this to complain. I'm telling you this to say that if we don't have a very centered and excellent state of mind, like it's not worth staying up late watching Netflix. If you really are struggling to make money trading or to gain some consistency, it's not worth it. It's much more worth it to sleep early, get plenty of rest, meditate, go work out, show up, and you are completely physically fit, not, ripped or a bodybuilder or anything, but physically rested and fit to do the job. I think that's supremely important, because focus is really important, just as it is for a fighter pilot or a surgeon or anybody that's doing something that's incredibly critical and things can go badly very, very quickly. Anyway, I just wanted to share that with you, that experience with you. I haven't had that experience in quite some time. And yesterday was an example of what could happen if we don't have our minds screwed on right. Yesterday, nice swing to new all-time high. So we have a new all-time high at 47.40.50, and then it just precipitates down to the downside. Pretty decent pullback and rotation down, which, as I said, I was too slow on. And then from there, it was just very murky, and it looked like there's some pretty decent lifting into 47.29. We came back out of the range, and it looked like a V bottom reversal yesterday, late morning Chicago time. It looked like it may actually start climbing back up and testing near highs. And then later in the session, we could see that yields were increasing. The yield curve is actually changing its shape, very, very important for many bigger time frame traders. And they started to hammer on the bid. You could see the delta just dropping through. For the type of movement, the delta was not that aggressive. Volume was very strong yesterday. I think we traded about 1.34 million contracts on a holiday week. That's about twice what I would expect. And then we finished very bearish yesterday. We did not have a neutral day or anything, but we did have a neutral day the day before. So I was expecting a bit of a bearish open, and we gapped up. We had an internal gap, and we ran. So yesterday overall was a very odd trade, a slight shift, I think, in opinions and perspectives. And then we're looking at this morning. We're looking at a market that extended the sell-off. We closed near lows yesterday, so with a weak low, we expect it to continue to drift lower. We clearly did not get any buyers into the close. We didn't find them, so we're likely to move lower to find those buyers. We did. We bounced back up, and then we continue down into that 46.54.50, which is a key area from 2 weeks ago. And now we're sitting sideways. So what do we have here? The market's on top of the point of control. We're at this apex of the profile, the volume profile, a very sharp apex, a very quick drop off above this 46.80 area. Very quick drop off in volume, very quick dry up. Seems like there's no interest above there currently. And we're maintaining above VWAP in mid, full session VWAP in mid, and we're opening at the extreme of yesterday's range. Under normal circumstances, I would consider yesterday to be an impulse down day. If you look at the composite, let's zoom in a little bit here. If you look at the composite, very clear excess high, very clear bearish engulfing type pattern versus Friday, but we didn't do too much damage. If you look at last week was relatively tight. The range for last week is relatively tight. 47.14 new all-time highs to 46.67. One of the tightest weeks in probably the last few months was last week. So we are starting to round the top, and I talked about it yesterday. We're starting to look like we're having a hard time pushing through. And it looked like it was refuted yesterday with that push to 47.40, but then we finish incredibly weak, and we are holding near that low. So I believe there's a lot of overhead here at 46.80, which is where we are now. It's not ideal where we're opening this morning. 46.80 and 4700, 46.80, 46.90, and 4700. There's a fair amount of overhead, and if it does open and squeeze through, there's likely to be a short squeeze of everybody that was short yesterday, and we're likely to push that 40 to the mid-century 47.50. In other words, if we start to move above where we opened yesterday, 47.12, we're likely to fill in the wick of this candle. We're likely to push through the wick of this candle because there was no balance above there. Balance is right here. Again, 4700, 4690, 4680 is the bulk of the trading that occurred last week. And then beyond there, there's 4673 just underneath us. And so to me, it looks like it's opening week. It looks like it is likely to try to be responsive to the upside and then continue lower with a potential test of 67. If we move into 4667, if we move into 4667, we're likely to see a precipitous drop through there. We're likely to see an acceleration to the downside into 4650, and then 4625 beyond there. 4620 becomes the key target below. You can see 18 is this naked point of control from the weekly. So we're expecting this to be the next key test. 4618, 20. If it's not able to find a bid, that becomes the key target. And then we have one more day of trading tomorrow before the U.S. markets close for Thursday and Friday. We have half days in the futures. I know I'm talking a lot here. I'm covering a lot. It's 8:20 Chicago time already, but pay attention to the fact that every time we make a high, we're selling off. We make a high, we sell off, make a high, we sell off, and so on and so forth. Just pay attention to that, as that is material to to how the market is maintaining or retaining prices. Let's take a look at Edge Pro X. Just a quick overview. Look at where it returned to yesterday. It returned right back to the monthly VWAP. The Dow has been below and is extending. Although the Dow is showing a little bit of strength here this morning, but the Dow's extending its gap from VWAP. It is this tells me that it's accepting these lower prices. VWAP is kind of turning over in the Dow. The Nasdaq pulled right back into that VWAP at 16,270 or so, 265, and then the Russell continues to have this big gap. This is just me trying to get everybody to not be myopic and to be too focused on your 1 minute chart or 2000 volume chart or whatever short time frame chart, and look at the big picture and look at how these indices overall are somewhat disjointed. Gold just completely breaking through here. This is why I expect some follow through to the downside. Bonds falling through. The bonds were lingering at VWAP, and now they're falling back through. This means yields, the percent yield on the long end of the curve is increasing. The 10 years completely running away. Again, this is why the financials are doing so well, or holding on so strongly this morning. Let's get into what's expected for today. Let's wrap this up in the next 2 minutes here and have you go on your way. I know I talked a lot about that mental state from yesterday and stuff, but I think that's the stuff that traders need to hear, in that you really need to have clarity. It doesn't matter who you are. It never goes away. The need to be sharp and on your game, and the minimum in this situation is to recognize. That's the problem with emotions in trading, is a lot of folks just don't recognize when something is off. It's really important to recognize it and not to be reactive to it, so that you don't dig a massive hole you can't get out of. Okay, so here's where we are today. Again, we have this very odd looking profile. It's a bit of a P-shaped profile overnight. The expectation is for responsive buying, and I'm expecting this to be shut off at 46.90 up here, 46.90, and potentially pushing into 97. Responsive buying. And then I'm looking for an impulse down, kind of like what we saw back here yesterday. Impulse down taking us to the 46.50. Close the single prints here, 46.50. And then for a bounce, and then I'm looking for this to kind of continue towards the 20 area. Down here, there's a lot going on. Look at that, just a cluster of stuff. The FOMC, SOC from earlier this month, the naked VPOC at 17. We have a single print at 20.75, and we have a key area, a high volume node right here, a high volume node all at 20. So this area here, the 20, is really important. And that's really what I'm looking for on the downside if we do extend. Look, I'm projecting a really wide range here, 70, 80 points. Not likely to happen, but it's there, so you know your targets. Secondary, open auction, that skews down, starts moving, takes out yesterday's low, and then we have a V bottom. We have aggressive buying. V bottom, consolidate at the overnight high at 90, breaks 90, and then we start to work ourselves through the double O, and then we start to work through to 11, and then catch back up to the 14, which is the prior high back here, 14, and brings us back into the prior day's point of control right in here. The prior day's point of control is 15, so I'm looking for 14, 15 as a target to the upside, and then balances out. Again, tomorrow is the last trading day for the rest of the week here in the US, so pay attention. There will be a trader by tomorrow. There will not be one Thursday or Friday. Good luck, and I'll catch you. I know this was a long one, but there's a lot to discuss here. Take care.